19.4% in a single day. That's what Twilio just did. Nearly $200 million of market cap added in one trading session. And right now, everyone is asking the same question. Is this the start of something bigger, or is the smart money already walking out the door? Because I've looked at the data and there is one number in this story that genuinely stopped me. Stay with me for 6 minutes because by the end of this, you'll know exactly what's happening with Twilio and what it means for you. Let's start with what Twilio actually is because context matters here. Twilio powers the behind the scenes communication for thousands of apps you already use every day. That text from your bank with the verification code Twilio. That Uber update telling you your driver is 2 minutes away Twilio. That reminder from your doctor's office almost certainly Twilio. They built the infrastructure that lets any developer add texting, calling, and email automation to their product without building it from scratch. It's not a flashy business, but it's deeply embedded in how the modern internet communicates. That's the foundation. Now let's talk about the price. Twilio closed at $227.54, and according to GF Value, a fair value estimate built from historical trading multiples, actual business growth, and forward performance projections, the stock is worth $116.93. That is a 94.6% overvaluation, not 10%, not 25%. The stock is trading at nearly double what the underlying business is estimated to be worth. The GF value label for Twilio right now is two words, significantly overvalued. Now the P/E ratio sits at 355 times earnings. That sounds extreme, and it is. But here's the context that makes it stranger. Twilio's own 5-year median P/E is 600 times earnings, meaning historically the market has priced this stock even more aggressively than it does today. The forward P/E drops all the way to 40 times, which tells you analysts expect earnings to improve substantially. So the valuation picture is complicated, expensive today, potentially more reasonable tomorrow, but still, merely double fair value is not a small gap to close. Here's where Twilio actually earns some respect though. Its overall GF score is 75 out of 100 above average for its sector. Growth scores an 8 out of 10. Momentum scores an 8 out of 10. The stock is up 93% over the last year. That is not a coincidence or a fluke. There is real energy behind this company. Financial strength comes in at 7 out of 10. Solid. Not perfect, but not a company burning through cash with nothing to show for it. The weak spot, and it's a significant one, is valuation. 3 out of 10. The business is performing. The price is the problem. And now we get to the number that stopped me. Over the last 3 months, Twilio's insiders, the executives, the board members, the people who sit in the rooms where the real numbers get discussed, have sold $327.9 million worth of stock. And how much did they buy? Nothing. $0. Not one insider purchase in 3 months. I want to be careful here because insider selling has legitimate explanations. Tax planning, portfolio diversification, pre-scheduled trading windows. These are all real. Selling alone is not a conviction call against a company. But $327 million sold, zero bought, at a moment when the stock is sitting within 2% of its 52-week high. That combination deserves serious attention. These are the people with the clearest possible view of what's ahead. And they chose this price, this moment, to take their money off the table. So here is the full picture. The 52-week low was $91.84. The 52-week high is 226 cents. Today's price of $227 puts you right at the top of that range after the stock has already more than doubled. If you're a momentum trader who got in earlier this year, the trend has worked in your favor. Respect your stop, manage your exit, and stay disciplined. If you're a value investor, the math here simply does not work. A 94% premium to fair value is not an opportunity. It is the opposite of a margin of safety. And if you're a long-term investor who believes in what Twilio is building, you may be right about the business and still get hurt by the price. Paying double fair value means you need flawless execution, no earning surprises, and sustained market confidence. That is a fragile setup. The bottom line is this. Twilio is a real business, doing real things inside products that millions of people use every day. The growth is genuine, the momentum is real, but the price is asking you to pay for a future that hasn't happened yet. And the people closest to that future just sold $327 million worth of their own shares. That is the data. What you do with it is entirely your call. And if you want this kind of breakdown every single week, no hype, no headlines, just the numbers and what they actually mean, then the best thing you can do right now is subscribe to this channel. Because the next time a stock moves like this, you want the analysis in your feed before the noise takes over. Hit subscribe. It costs you nothing, and it might save you a lot. Drop your take in the comments. Are you buying Twilio at this level, waiting for a pullback, or walking away entirely? I read every comment, and I genuinely want to know where you stand. I'll see you in the next one.